Welcome to all. I am Dr.R. Sheela, Assistant Professor in Commerce, Self-Finance Section, Sita Lakshmi Ramasamy College. Today, I am going to have the topic Elements of a Cost, a Comprehensive Guide. First, we see the direct materials, the tangible foundation. So direct material cost is the material cost entering into and becoming constituent elements of a product or a saleable service. Thus, the materials which can be identified with units of output or service are known as direct materials. Example, wood, metal, fabrics. So cotton is used production of cloth, leather is used in the case of production of leather goods, and lime in the production of chalk are the examples of direct material. Next, direct labor, the human contribution. Direct labor refers to wages paid to workers. It's crucial to track and manage these costs. Labor is remuneration paid for physical or mental effort expended in production and distribution. Labor cost is also divided into direct and indirect portions. Direct labor cost. It's also called direct wages. Direct labor cost is the cost of labor directly engaged in production operations. Example, workmen engaged in assembling parts, carpenters engaged in furniture making. Manufacturing overhead, the indirect cost. Manufacturing overhead includes all indirect manufacturing costs. They are factory rent, utilities, and depreciation. These costs support production but are not directly traceable. So the aggregate of all the indirect costs, that is indirect material, indirect labor, and indirect expense is also termed as on cost. Overheads or on cost or indirect cost can be identified with a special of jobs. So it is apportioned to the output on some reasonable basis. According to ICMA defines as overhead the aggregate of indirect materials cost, indirect wage cost and indirect expenses. ICMA has stated in the note appended to this definition on cost and burden as synonymous terms which are not recommended. Next, we see the prime cost, that is direct cost combined. The sum of direct cost, that is material and direct labor, represents the total direct cost in production and helps assess resource utilization efficiency, direct material and direct labor. Conversion cost, transforming raw materials. Conversion cost, converting the materials, that is raw materials into finished goods. That includes direct labor and manufacturing overhead. It represents the cost of converting raw materials that is essential for understanding the cost to turn material into finished goods. Period cost, that is expenses outside production. So that is period cost or expenses not related to manufacturing, such as selling expenses, general expenses, administrative expenses, advertising, administrative salaries, office and supplies. So these are not profitable to the business. That is very essential for the profitability of the business. Cost allocation and management. Cost allocation assigning indirect cost to cost objects. Cost management controlling of cost. Effective allocation and management to lead better decisions. This drives profitability and efficiency in operation. First, let us see how the total direct cost of production is essential for measuring efficiency. How is prime cost calculated? Prime cost is equal to raw materials per direct labor. What's included here? Direct material like timber, cotton or metal, and direct labor like the wages of assembly in line workers or machine operators. What is to be excluded? That is indirect labor costs like managers' salaries and fixed costs that don't change with the production levels. Prime cost is very important. Setting prices, business can prime cost to set price that yield desired profit. Increasing profits by lowering prime cost businesses can increase profits or undercut competitors' prices. Determining minimum sales price. If the sales price does not exceed the prime cost, the company will lose money on such each unit produced. Who can use prime cost calculation? That is, self-employed business individuals like artisans create and sell custom-made furniture. Conversion cost. For example, a chair manufacturing firm incurs the following cost: rupees 50,000 for wood, 1 lakh for production, workers 50,000 for production manager, 1 lakh, rent for manufacturing building. Total conversion cost is 2 lakh 50,000. So conversion cost is whatever we're supposed to say direct labor plus manufacturing overhead. So that comes under conversion cost is equal to production workers, that is production managers, rent for manufacturing building. The conversion cost comes to 2,50,000. So conversion cost is very important because the costs that make up conversion costs are all the cost incurred to convert raw materials into finished product. These costs are direct labor and manufacturing overhead. So conversion costs are calculated by simply adding all direct labor cost and manufacturing overhead cost. Direct labor cost or the labor cost that can be directly traced to a product. Manufacturing overhead cost includes all costs associated with the manufacturing process but can't easily trace or trace to any one product. Reflects the cost of converting raw materials into finished products. Period cost, I told already, it's not related to manufacturing expense in the period they occur. They include selling expenses, that is the cost in accounting period that are not directly related to producing a product or service. They are known as period expenses. Period cost, we see. Examples: marketing expenses, sales commission, utilities, and professional fees, we say. How periods costs are reported. Period costs are listed in an expenses in the accounting period in which they occur. They appear on the income statement rather than on the balance sheet. Once period costs are added to the income statement, they are subtracted from the gross profit to get the period's net income. So how this period costs are analyzed? They are analyzed by regular basis that helps to identify the areas where the cost can be reduced or eliminated. Next, why these expenses, that is particularly administrative expenses, are important. They are incurred regardless of whether the company sells anything or not. So to calculate the administrative overheads, all the list of company's expenses, categorize the cost, highlight those fall to the administrative expenses category, add up the totals. Cost allocation and management, an overall summary. So assigning indirect cost and specific cost objects. Cost allocation is the process of assigning cost to cost objects such as people, projects, or departments. It helps business understand which parts of the business are responsible for specific cost. Purpose: to spread cost fairly across departments, to calculate profitability, to derive transfer prices, to measure financial performance, and to improve decision making. How it works: identify the cost object, identify the associated cost, record the cost in ways that are useful for the business. Cost allocation method, that is activity based costing, reciprocal allocation, cost allocation based on direct labor, cost allocation benefits. So what are these methods? That is activity based costing based on the activities that consume resource. Reciprocal allocation, when multiple cost centers support each other. Cost allocation based on direct labor based on the amount of direct labor used on a production unit. Benefits: it helps the business to find reduce waste, helps the business to determine how to price the goods and services, helps the business improve in decision making. Cost management controlling cost to improve decision making and profitability. The key takeaways: understanding direct and indirect cost is crucial for profitability. effective cost allocation and management drive operational efficiency and strategic planning. This presentation serves as a guide to understanding and managing cost effectively in a business. Thank you.